So down day for the market, but the indices are well off lows. Autos, PSU are the big drags, while pharmaceuticals hold up. Mid-caps see a bigger decline.
A muted outlook and disappointing margin guidance for JLR, besides fears of growing competition globally and in India in personal vehicles and EVs, drives Tata Motors down.
Guidance on expected improvement in profit margins acts as a pep pill for Cipla, whereas the company says that they're open to a large acquisition. Analysts cite its strong US pipeline as another positive. The stock higher today.
ABB jumps on beating expectations, riding on strong demand. Piramal Pharma leaps after an all-round strong show on sales, profits and debt reduction, but Bank of India slumps on a sharp rise in slippages.
Prime Minister Narendra Modi, in an exclusive interaction with Network 18, calls the India alliance directionless and says that the Modi storm will see the ruling alliance cross the 400 seats mark. Minister of Commerce Piyush Goyal echoes the Prime Minister's views in another exclusive interaction with Network 18.
Hello and welcome to Halftime Report. I'm Ekta Batra and with me is Mangalam Malu. Well, yes, we've started on the downside for this week. So let's see how we progress. It seems to be election jitters which seem to be dominating us at this point in time. And you can see that in the markets. You can see that in the key indices, in the mid-cap index, in the advanced decline ratio, and also the India VIX that we've been pointing out for the past couple of weeks as well. So now the India VIX should come up for you. It's up around, 60% this month itself, Mangalam. So it's a significant rise that we are seeing. And I think this markets are factoring in any kind of volatility possibly ahead of that June 4th outcome. But nonetheless, we have a lot of specific stocks, Mangalam, that, are doing well today, and we should take note of that, especially in the broader markets. We have a lot of stocks which are managing to gain today. The new listing in Digene is up around 29%, ABB, Dr. Lal's, Piramal Pharma, RPG Life, all of these stocks, Moil, up anywhere between 3 to even double-digit gains.
A bunch of stocks doing extremely well, Ekta. Even the market has recovered a fair bit from the lows, over 100 points in terms of recovery from the Nifty. The Nifty bank is now sitting with a cut of just about 100 points. At one point, it was, threatening to break below that 47,000 mark as well. Numbers flowing in thick and fast. At the bottom of your screen, you have the numbers coming in from Varun Beverages. Revenue growth of 11%. The net profit growth is a lot higher, implies that there is some margin improvement that has come by out there. But for Varun Beverages, it's not this quarter which is important as in the reported quarter, but the quarter that we're in right now, more important, given that this is their peak season. They sell, they're bottlers of Pepsi. So EBITDA is up 24% on 11% revenue growth, telling you there is margin improvement. The stock has seen a big rally already, but not much was expected from this quarter, largely because of extended winter. But because of relatively hot summer, maybe the quarter that we're currently in, the summer quarter, should do well for them. And that's what the street may be penciling in going forward as well. But speaking about numbers, we have Relaxo Footwears as well. The first management on the show reported a soft set of fourth quarter numbers. The footwear major saw a slight decline in overall volumes, but the average realization saw an improvement. We have Mr. Ramesh Kumar Dua, who's the MD of the company, joining in. Thanks a lot, Mr. Dua, for joining in. There were signs of recovery. There were some positive signs during this quarter, even as, the overall numbers were a little soft. As we stand at the start of a new financial year, with all that you've directed towards in terms of increasing sales and the consumer sentiment, what's your outlook for FY25 in terms of performance for Relaxo Footwears?
The last year, by and large, the demand has been subdued throughout the year. It is only in the last quarter we find some uptick in the demand in rural sentiment, and keeping in view that better monsoon is expected this year, the things are going to improve. That is what we feel like.
Okay. So, Mr. Dua, just to, specifically talk about that point about improving demand in Q4, how much do you expect it to sustain in FY25? Anything that you can quantify in terms of total sales, in terms of realizations?
Yes. Mr. Dua, I think one of your headphone jacks have come off, so we'll just try and repatch that with you, the vagaries of tech as of now. But, it's good to know that there are some green shoots of recovery here, because more than a fair amount of their sales come in from open footwear, which is basically, entry-level footwear, etc. The realizations are around 149, 150 rupees odd per piece as well, which is, a lot lower than the realization at the premium end itself. So his commentary on supply and the demand sentiment would be extremely crucial, because that would give a true picture, of how demand is. The last couple of years have been rough for them. We've seen the impact of that on their stock price as well. But we'll try and repatch the connection with Mr. Dua once again. But in the meanwhile, there are some more details coming in for Varun Beverages. Margins are at around 22.5% versus 20%, Ekta.
Yes, absolutely. Doing well for Varun Beverages. The net profit has risen around 25% on a year-on-year basis as well. Well, that's on Varun Beverages. Just want to point out for the markets, like we've been pointing out, there's been a recovery which has taken place, and that seems to be sustaining as of now. I think we have Mr. Dua back with us. Mr. Dua, hi. I hope you can hear us clearly now.
Yeah.
Okay. So if you could just give us a sense in terms of what you're envisaging going into FY25, based on what you saw in Q4 in terms of a recovery in demand. Do you expect it to sustain in FY25? And if so, what would that mean in terms of numbers for you?
The demand, as I told you, is subdued, and we are expecting some better demand coming up because of better monsoon. But despite that, last year we have taken a lot of sales transformation measures, like installation of DMS2, and better latest SAP, that is S4HANA, and then a retailer's app, which has, all these things have created better connect with the retailers. And also in e-commerce, we have started selling more through our BAS, brand as seller. So where the goods are going directly to the consumer. All these things is improving our retailer inside, consumer inside, and our focus has been more on secondary sales rather than primary sales. All these initiatives which we are taking, it will have a very positive impact in this year.
So
and
can we
expect much more, irrespective whether,
Right. So irrespective of what happens in the consumer sentiment, because of the things that you've done at the back end, including distributor outreach program and the kind of digital Relaxo Parivar app that you've launched as well, should bode well in terms of growth for you. Should we expect you to do at least 10% revenue growth in FY25? And if that is the target, then, how much comes in from mass segment, how much comes in from premium segment? What is the kind of margin outlook that you have for this year?
You see, double-digit growth, we also are hopeful that we'll have it. And then margin, margin always depends upon our sale. If the sale is double-digit, margin also is likely to improve. Last year we had 14%, and I think this year 50 to 16% range we will be able to achieve.
Okay, so you'll be able to achieve that 15 to 16% range. Did you need to take any kind of price cuts in the previous year to probably spur up demand? And what would that strategy be going into FY25? Are you envisaging price cuts?
No. Price cut we did not last year, before that. Last year, by and large, the prices were stable. And the market what we are in, we have to always keep very competitive pricing. And this is we are going to continue next year also. It is because of competitive pricing that we are getting inroads into the market. And the more sale we are able to achieve, more that also improves, have a positive impact on our EBITDA. So our pricing policy will remain competitive, keeping view there are a lot of local players in our market.
You've been focusing strategically on the open footwear, which is lower priced, and at the same time, you've also looked at increasing your revenue coming in from sportswear, the Sparks brand. Going forward, what will Sparks' contribution be to your volumes and revenue, and the outlook on realizations?
So in the last year, our Sparks brand contribution has been 38% in the overall thing. So our focus is there on the Sparks brand, and I think things will improve. As for the premiumization is concerned, we are offering products of different segments and different all kinds of whatever we are dealing, whether it is a Bahamas and Hawaii flight and also Spark, and keeping in view our insight about the consumer needs, we are developing products and making it available at definite price point. And all this thing is helping. Whatever demand is coming from those articles, we are catering to it.
Okay. All right. Mr. Dua, then just leave us with maybe a statistic to help us understand better what FY25 is looking like. The number of pairs you sold in FY24 were around 19.5 crore. How much do you think you can probably sell in FY25?
You know, even in the next year, this is actually FY25, our volume growth is going to be double digit because prices are by and large stable. So if we say volume growth double digit, then volume growth also has to be double digit.
All right, so double digit volume growth, close to around 22 crore pairs. And how does the BIS impact the footwear industry, and do you benefit from it, or do you have to load up on a lot more inventory?
So we are already implemented in the January BIS, and as you know, all our articles what we are selling, they are ISI marked. Whatever little bit, standards we have to revise or keep aligned with BIS requirement, that we have done, and as a result, there has been some cost increase also, which was nominal, which have also been passed down. So we have revised some of the prices, keeping in view the specs that we have to conform to as per BIS.
Okay, all right, Mr. Dua, we're going to leave it on that note. It's been a pleasure talking to you. Thanks very much for joining in and speaking to us. So that's Relaxo Footwear. They're expecting maybe some amount of improvement in demand going into FY25 and double-digit revenue as well as volume growth. Well, we need to take a short break, but up next, we'll be talking to Ankit Thakkar, who's the CEO, Chief Executive Officer of the hospital company Jupiter Lifeline Hospitals, to discuss their quarterly performance. Stay tuned. Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Well, Jupiter Lifeline Hospitals is the next management on the show. It reported what was a good set of Q4 numbers. It saw improved occupancies and average revenue per occupied bed in the fiscal as well. To discuss more of this, we have Dr. Ankit Thakkar, who's the CEO of Jupiter Lifeline Hospitals, joining in. Ankit, hi, welcome to the show and congratulations on what's been a good quarter for you all. If you could just break up what the occupancies and the average revenue per occupied bed was for all three of your hospitals, Pune, Thane as well as Indore. Okay, I think you're on mute, Ankit, if you can just request you. Yeah, go ahead.
Do we now, Ekta?
Yeah.
Okay, so the occupancy for this year has been about 64% on a blended level. Thane is at 72, Pune around 62, and Indore for the whole year was 52%. And the ARPOBs have been in the range of 55,000 on a group level.
All right. So Indore 52, Thane 62, and the other one you said was 72%.
72 Thane, Pune 62, and 52.
Pune 62 and 52 for Indore. What about the mix of high-end surgeries in the quarter? And you did speak about the average revenue per occupied bed on a consolidated basis. You want to break it down for all these individual facilities?
Sure. So Thane is around 61,000, Pune around 54, and Indore around 41.
And what was the mix of high-end surgeries this quarter?
So we don't really track high-end and low-end surgeries in that sense. We are focused on, comprehensive care. All our hospitals are hub units, so we don't really make a distinction on primary, secondary, tertiary. We just do all facilities in each hospital.
Your consolidated average revenue per occupied bed was what, 55,000 rupees you mentioned?
Yes.
Okay, that's quite a lot for a hospital which is focused on micro markets as well. Give us a sense in terms of what you're probably, going to increase your ARPOBs to, and how much of it is probably going to be pushed by insurance coming in as a payment method for you.
So, Ekta, when you say micro market, what it essentially means is that we are located in very dense residential areas, and we choose those locations where there are a lot of local residents in tier 1 urban cities, but they don't have a good healthcare facility within a 30-minute driving distance. So there is nothing that in terms of healthcare that we would not do. We go right up to heart transplants and liver transplants and cancer and all of it. So we have a full suite of services in each of our hospitals. ARPOB, I think going forward, we are quite satisfied with the ARPOB numbers the way they stand. And we believe that Thane and Pune should only see inflation-linked growth in ARPOB going forward. Indore, however, is a relatively newer facility. There might be an additional lever of improved case mixes, more complex surgeries, etc., which is a natural course in the first 3 to 5 years. So that is an additional lever for Indore, otherwise inflation.
All right, another lever for Indore, because it's a new hospital, will always be increased occupancy along with increased ARPOB as well. So what are you factoring in terms of, an overall improvement in occupancy and ARPOB in FY25? And you have a couple of facilities coming on board as well that starts from FY26, I presume.
That's right. So in Indore, occupancy would definitely be a lever for overall performance. This year, we had an exit occupancy nearing 60%. We think this is a good time to, think about capacity enhancement. So we have secured permission to build 2 additional floors in Indore, and we would be adding about 75 new beds in Indore. Pune also with 62%, I think, is a good time. We have a possibility to add 22 new suite rooms. We are going to do that in both these activities in the current financial year. Besides this, you asked about the new hospital. So the Dombivli Hospital, which is already under construction, is progressing as per expectations. It is likely to commence in Q4 of 26. And besides this, we have a second location in Pune, which we have just signed. And we will be building a new 500-bed hospital in Pune as well. So that is about the new facilities.
Okay. So Ankit, I just want to touch on this point with regards to the Supreme Court ruling on the possibility of standardization of rates or linking it to CGHS. Are you a part of any kind of health body which has moved the Supreme Court? And what might be the progress? What is the industry saying on this? And your view on whether it could possibly even be implemented?
Sure. So because it is still pending before the Supreme Court, I think my view is not appropriate to air. However, the facts of the matter I would be happy to share. In one of the hearings, the Supreme Court had requested the central government to do a consultation with the states and get their view, because health being a state subject. And the union government did in the previous hearing, in fact, come back to the Honorable Court and present their minutes of their discussion. And most of the states have not clearly voted for this initiative. They have acknowledged that different qualities cannot be at the same price point. They have acknowledged a lot of complexities in carrying out this exercise, and that has been placed before the Honorable Supreme Court. However, the final verdict is still out, so we'll wait and see which way it goes.
Okay. And for you in particular, Ankit, your payer mix indicates that you get revenue and correct me if I'm mistaken, you get revenue from government schemes, which is absolutely minimal, I think at around 1.2%.
Right.
So if in case there is any kind of alignment to CGHS rates, how would it impact your business? Would there be a complete cut in rates which you would have to undertake in order to align yourself?
Yeah, if there are new rules of the game which will get applicable to all providers in the country, then, everyone will have to realign their business models. Currently, I think it is a little far-fetched and hypothetical situation. So eventually, the way the court directs, I think we will all have to adapt and comply.
But
All right.
how far away are you from those CGHS rates?
I think all private hospitals, the private patients, the insurance and cash are significantly higher than CGHS rates for the corporate hospitals, all the listed ones, which you would be seeing. So there is a definite delta between the CGHS and the privately charged patients.
And just before we let you go quickly, what's your balance sheet looking like? Can it support inorganic plans, or you are satisfied with the organic growth targets that you have?
So definitely our balance sheet is now completely deleveraged. We are fully debt-free post-IPO. So we have free cash available as a result of that. And also, like you said, if there was a good opportunity where we thought that we had to lever and take on something, we are absolutely capable of doing that. Having said that, the current thought process is to keep going the organic way. Along the path, if we do find some interesting opportunity, the balance sheet will support.
Okay. All right, Ankit. It's been a pleasure talking to you. Thanks very much for joining in and speaking with us and giving us all of that perspective. Well, that's the view coming in from Jupiter Lifeline Hospitals. That stock is up around 5% post Q4 numbers. We'll take a break. Richard Jain will join in next with some trading ideas. Stay tuned.
22,000 on the Nifty. That's the headline for the afternoon. After a brief dip in the morning, the Nifty has seen a sharp recovery. Now it's seen a fair amount of jump from the lows. In fact, the day's low today was 21,821. From there, it's about 180-point recovery, 22,000. So as a result of which, both the Nifty as well as the Nifty Bank have seen a fair amount of recovery. The Nifty Bank now virtually about to move into the green. Now down by just about 21 points as we speak. It may just about move into the green. So that leaves us with two important levels to watch out for. One on the Nifty, today's low, which is 21,821. And for the Nifty as well as the Nifty Bank, is the 100-day moving averages, which will be extremely crucial to track as well. So both of them should come up for you on the screen. The Nifty, today's low, as well as the 100-day moving average, and the 100-day moving average for the Nifty Bank as well. What I'll track from now is the mid-cap index. Usually the mid-cap index moves ahead of the frontline indices. Sensing this recovery in the frontline indices, the mid-cap index, which is currently underperforming, is there a case for it to move higher? Well, the answer for that would be in the way the crisscross lines behave. India VIX is up for the 12th straight session, though it's off this morning's high. So that is something we'll have to monitor as well. For the Nifty, however, 22,000 call writers have been extremely active. For a premium of almost 50 rupees, if the Nifty sustains above that 22,100 mark, we could probably see a lot more in terms of an uptick. That's the 22,200 call. I'm talking about the 22,000 call, and at the lower level, the 21,900 put, which is closer to today's low, also is equally active. So today's low, extremely crucial. One stock I'm watching out for is Asian Paints. A lot of short covering seen on that stock with overnight decline in oil prices as well. And it's crossed the 50 and the 20-day moving average in today's trading session. So maybe, technically it looks like it's moved higher. And Birlasoft is the other one that I'm watching out for, may perhaps enter the F&O ban. So that's another stock that you should keep on your radar.
Okay, all right, Mangdam. So that's on the F&O space. Richard Jain joins in to discuss the technicals of the market. Richard, hi, welcome to the show. Well, we are seeing a good recovery take place in the markets. Bank Nifty is in the green as we speak. How are you approaching trade?
Hi, very good afternoon, Nita. Very good afternoon, Mangalam. Well, last 6 trading sessions, we have already seen a very sharp fall without any meaningful pullback, and the lower time frame charts are in mid oversold zone. Also, as Mangalam pointed out, that 100-day exponential moving average support is where today's low of Nifty is there. So I think if this low remains intact, then we could see some pullback move in the near term towards 22,200 or so. It remains a sell and rise market from a very short-term perspective, but these are not the levels where one should think of going short. Either a breakdown or a close below 21,800 or on a pullback move towards 22,200 to 250, that will be the range where fresh short should be initiated. But right now, I think markets is in a phase in between both this, so we could see some kind of pullback move towards that higher end of the range.
So let's talk about individual stocks then. If the frontline indices are in no trade zone, quickly, Ruchit, what are the stocks?
So, Mangalam, couple of buy recommendations since no, we are not looking for short after this no, recent correction over here. But buy recommendations are both wins no, which have been showing some strength or a bit of defensive in nature. First would be HUL, where at recent lows we have seen a good price volume action. So, we believe that the short term bottom has been done for the stock. And irrespective of market volatility, we can see some decent pullback. One can go long with stock below 2300 for potential targets of 2450. And my second pick would be a buy call in Cipla. So post results, some interesting divergence have been seen over there. On Friday, we witnessed a correction in the prices where it formed a new low on the daily chart, but RSI has formed a higher low, which is generally seen as positive divergence. And if you look at today's volume on the daily chart, it's much higher than what we see on Friday during the sell-off. So this clearly indicates a reversal of the trend. So one can go long in Cipla over here as well, with stock below 1335 for potential up move towards 1550.
Okay, all right, Richard, we're going to leave it on that note. Thanks very much. We'll take a short break, but up next, we'll speak to Vishal Manchanda, pharma analyst at Systematics, and put the focus on Cipla's Q4 numbers and that margin guidance, which has really enthused the market. Stay tuned. Welcome back. Let's put the spotlight on Cipla, and it was an interesting set of numbers that Cipla did come out with. It came out with its numbers during market hours, but the conference call highlighted the margin picture, or the margin guidance again. So I just want to go through that. The guidance was that they expect the margins to improve to 24.5 to 25.5% for FY25, which is an improvement of around 100 basis points. They also expect cash deployment to be towards M&A, and they expect an increased payout to investors. They're open to large acquisitions in India. India and South Africa businesses should grow faster than their respective market growth. So they're quite bullish on those two segments. They've completed remediation of the Goa unit, and remediation of Indore is underway. A Brexon generic launch, that's one of the key cancer drugs. It's expected now in late FY25. They're factoring in an inspection of one of their key facilities, I think Goa, which is where it's filed from, by July or August 2024. They are optimistic on growing the US business over the current base of $900 million. They're looking to launch 4 peptide assets in FY25 as well. Brokerage is positive. JPM has an overweight. They've raised their target price to 1540. They say the EBITDA margin guidance is ahead of estimates. Jeffrey says that the company did not provide sales guidance, but the EBITDA margin guidance is higher by 180 basis points at midpoint versus previous estimates. Citi, buy, target price 1650. They believe the margin guidance again is better than expectations of a flattish trend. And HSBC as well as Kotak, both of them are quite bullish on the margin guidance that Cipla has provided. So let's see whether they sustain it or not. But in fact, we did speak to Umang Vora on the margins, and this was during his press conference right after the numbers on Friday afternoon. Let's listen into what he had to say.
I think there's a margin decline from quarter 3, but that's largely because of the reverse seasonality of India. So when I look at our EBITDA versus EBITDA margin versus the previous year, our margin is actually up. I would think about close to 200 basis points. So I'm not sure what the miss is about. Versus quarter 3, the margin will always show a decrease because quarter 3 is peak respiratory season, and quarter 4 is reverse seasonality. So we don't see a margin miss actually. The margins have come exactly like, or in fact higher than what we had internally estimated.
Okay, and he goes on to say the margin guidance is 24 to 25% going forward as well. Well, we do have Vishal Manchanda, who is the pharma analyst at Systematics Group, joining in to discuss this. Vishal, hi, welcome to the show. Well, if you could just start by giving us a sense in terms of Cipla, strong up move there in terms of the stock. It's up around 6 odd percent. Is the guidance the key driver this time, that they expect 24 to 25% margins going forward?
Good afternoon, Ekta. So I think on Cipla, there are multiple things to look at actually. So beyond the margin guidance, so that's always encouraging. And they have multiple levers actually to take the margins higher from here. So one, you have Revlimid market share expanding in the US. Second, their consumer healthcare business also has space to kind of move higher in margins, because that's scaling up fast and it's not reached optimal margins yet. Then there are other high value launches then that they are waiting for in the US. So Abraxane is one of them in FY25. Apart from Abraxane, there are, so we can see margin expansion extending into FY26 too. So Advair Symbicort launch in FY26, plus there is another QR launch in FY26. Pithampur facility coming back to normalcy will also help margins. So multiple triggers for margins to expand for Cipla. But there's also one more important aspect about Cipla is they might enter into China and can make it larger. So they announced a plan that they would commence commercial production from in the second half of this financial year. I think that is also something going to be important from a top line growth perspective and margin perspective, both from in FY25 and FY26. So I think this greatly enhances the growth opportunity for Cipla beyond India, US. I think China would also open up as a growth lever for the company.
All right. So, among the other things that the management said, they also said they're open to a large acquisition in FY25. What are the spaces where you see, this possibility coming true? And are there any assets to your mind right now on, which Cipla you think should buy?
I think, so if you look at, most companies have been focusing on acquiring branded generics, branded generic products or branded generic companies. But I think that space is a bit heated up. Getting value there is difficult, but probably it would be better to focus on some alternative areas that could leverage, that basically they can leverage their branded presence for. So one is point of care diagnostics. So Cipla has kind of started looking at that space. They have made they made some progress there. That is one. And second, which every Indian player is actually looking at, is getting into innovation. So in licensing NCE assets from biotech or specialty pharma companies in the US. So that potentially could make us more attractive M&A steps.
Okay, just quickly wanted your view on Piramal Pharma. It's seen a strong up move post numbers, and on the other end, Neuland Labs, which has seen a sharp downtick post numbers. Neuland, the numbers were not bad, unless, they did come off on a high base on a year-on-year as well as Q-on-Q basis. And I assume that the business model is lumpy. So just wanted your thoughts on Neuland as well as on Piramal Pharma.
So I think both these CDMO names, their trajectory largely is contingent on the NCE assets that they manufacture for their partners. So for both, I think for both Neuland and Piramal Pharma, I can see visibility around ramping up value CDMO business around NCE assets. So Neuland probably would have an NCE asset that they would start manufacturing commercially by end of this calendar year, or maybe the next calendar year. So that could potentially be a very large opportunity for Neuland. They already have some part of that into the revenues, but that can scale up meaningfully from what it is today. I think on Piramal, they are doing well on some of the CDMO opportunities that they already have in their pipeline. So those opportunities are scaling up in end markets, and that is translating into higher revenues for Piramal Pharma. I think it's a migraine asset that they are doing well on in terms of the end supplies to their partners.
Okay, all right, Vishal, we're going to leave it on that note. I'm sure we're going to touch base with you as more numbers trickle in within the pharmaceutical space. Thanks very much for joining in and speaking with us. Well, we'll take a short break, but more on the market, stock-specific action on the other side. Stay tuned.
The voting for the fourth phase of the 18th Lok Sabha elections is currently underway. But meanwhile, what's also underway is a big recovery from the lows. The Nifty Bank is now in the green, and the key contributor to that is HDFC Bank. HDFC Bank has seen a recovery of nearly 2% from the lows. An up move is what we've seen from the lows, and by virtue of its weight on the index, it's not only taken the Nifty Bank into the green. The intraday chart should come up for you. That's doing well, and the Nifty too, now virtually moving into the green as we speak, down just 16 points. So that's a stellar recovery. This day definitely will belong to the bulls if we close in the green and manage to close above that 22,000 mark. Given the sort of shorts in the system, maybe ripe for some recovery and short covering in the second half of today's trading session as well. But let's talk about the elections which are currently underway. The fourth phase across 96 seats and 9 states, 1 union territory. Some major states such as Bihar, Andhra Pradesh, Telangana, West Bengal, Uttar Pradesh and Jharkhand will go to the polls. So what is at stake? Our reporters are all standing by to tell us more on the ground. We have Santia first joining in from Begusarai in Bihar. Santia.
So polling is underway on 5 seats in Bihar. That's Begusarai, Munger, Samastipur, Darbhanga and Ujiarpur. Big ticket candidates. From Begusarai, Union Minister for Rural Development of India, Giriraj Singh, also infamous for his extremely communal statements, is contesting, and he's up against CPI's Avdesh Kumar, somebody who has a strong ground presence. He's a 3-time MLA from CPI. Another key constituency for where polling is underway is Ujiarpur, where MOS home Nityanand Rai, he's a 2-time MP, he's the sitting MP from Ujiarpur. He's once again contesting on a BJP ticket and is up against Alok Mehta. So these two are important seats, and other than that, Samastipur is also important. Both the candidates of India Alliance and NDA are children of ministers who are close to Nitish Kumar, so too much for the nepotism debate as well. So these 5 seats are important for both the alliances this time, because as I said, there are 2 minister, one minister of state and 1 union minister. Other than that, for Darbhanga also sitting MP is one Gopalji Thakur. He is once again contesting from Darbhanga on a BJP ticket, talking about key election issues. Unemployment, inflation are going to be the most important election issues, but unfortunately, sadly, it's Bihar, so caste dynamics is going to play the most important and deciding role in this particular phase, and not just for this phase. For Bihar, it's true for all the seats. So whichever side will get the caste dynamics right is likely to win the state and maximum seats.
All right, Sandhya, thanks a lot for that. Meanwhile, we also have News 18's Mayuresh Ganpatiye joining in from Beed, Maharashtra.
In the fourth phase, the interesting battle is happening here in Beed, where Pankaja Munde is contesting the Lok Sabha election. This is her first Lok Sabha election. Yes, Pankaja was a state cabinet minister in 2014 to 2019, but in 2019 she was defeated by her own cousin brother Dhananjay Munde of NCP. Now, Dhananjay Munde, who's a part of NCP led by Ajit Pawar, is in this government, and he is helping Pankaja Munde. So that's why Pankaja is very much confident that she will win with the thumping majority. If we see this particular district, in this particular district, after 2014, when Gopinath Munde won and he died immediately after the results were announced, and after that the bypolls had happened, Pritam Munde was given the ticket. Pritam Munde is a younger sister of Pankaja Munde, and in 2014 and 2019 she won with a good majority. So right now also Pankaja is confident that voters of Beed will certainly support her in this election. But if we talk about Pankaja Munde, from 2019 till now, she was not that much active in the state politics, though she was given a responsibility of Madhya Pradesh during the last assembly polls in in that particular state. But there was reports suggest that she had missed many meetings of state leadership of BJP. But now it would be interesting to see that whether the Bid people or voters of the Bid support Pankaja Munde or not. Also, there is another factor is that the lower voter turnout. When we spoke with Pankaja Munde, we asked her this question, and when she said that it is a cause of concern for us, but she is confident that post 3 p.m. When the sun will start setting up, that time people will come out in large number and they will vote for the BJP, because she said that people believe in Narendra Modi and his vision of development. This is Mayuresh Ganpate reporting from Bid with camera person Nitin Sonavne.
Okay, all right. Well, that's the update coming in terms of the elections. But let's move on now. TVS Holdings Board has approved the acquisition of nearly 81% stake of Home Credit India Finance for 554 crores. The company said that the acquisition aligns with the strategy of TVS Holdings to expand in the consumer finance sector and further strengthen its portfolio. Our colleague Parikshit did catch up with Sudarshan Venu, who's the MD of TVS Motors and MD TVS Holdings, to discuss in detail about the new acquisition and its importance for the TVS group.
I think this acquisition focuses more on consumer durables and personal loans. In addition, Home Credit has a very good distribution and digital app. It also has a large customer base, which represents a huge cross-sell opportunity for new products like gold, other personal loans, auto loans, and education loans as well. I think it also represents a large focus on new-to-credit customers with a very good distribution, and that is something that we will really look to capitalize on.
What are the kind of synergies that we can expect between TVS Credit and Home Credit India Finance?
I think there's definitely synergies in terms of collections, in terms of the tech stack that we are developing and AI that we will leverage to serve our customers better, and the digital assets and digital infrastructure. There's also synergies in terms of costs and cost of funds and sourcing of funds. And lastly, there will be huge amount of cross-sell opportunities as well. So the combination, I think, will create very good synergies where Home Credit can focus on its existing customer base, but also leverage the strengths and synergies of being part of the TVS Holdings Group.
When it comes to mergers and acquisitions, can we say that you would be looking out for acquiring more entities in the credit finance business, be it in home loans, gold loans, or health insurance for that matter?
I think our focus is to cater to the chosen customer segments with good quality of credit and in a profitable way, and to continue to grow. As part of that, we will grow organically largely. As we find good opportunities, we are open to inorganic ones as well, like Home Credit. But I think the focus is really on the customer segment, the quality of credit, and running a profitable operation which grows at the right pace and with the right levels of risk.
Right. Now, in terms of your expansion plans, there is a customer base that Home Credit Finance already has. These two group companies, TVS Credit and Home Credit Finance, how would you like to expand them across the country over the next 3 to 4 years? Any targets that you're setting?
I think over the next 3 years, we'd like to take the book to 50,000 crores combined. And we'd like to maintain the Home Credit brand for a period of time to focus and cater to the new-to-credit customers with a larger rural focus than TVS Credit presently has, and leverage the distribution, but also the phygital distribution, both physical and digital.
Right. Coming to your automotive business, Sudarshan, in terms of electric two-wheelers and electric three-wheelers, how would you expand your portfolio this year?
We're looking at a full range of electric vehicles, Parikshit. So you already have a new iQube coming soon. We've launched TVS X at the top end of the market. There will be one more electric scooter this year. And also we're looking at a huge opportunity with transportation and logistics. I think three-wheelers will focus on both cargo and on passenger. And we're also looking at electric bicycles, and at some point in time, there'll be an electric Norton as well. So we will have the complete portfolio of electric vehicles, which we believe is very important for our future.
What about the electric Norton? When would you like to bring it to the market?
Well, we'll start first with the 4-cylinder Norton next year, and then we'll take it from there.
Right. In terms of capacity ramp up, Is there a plan to increase production, considering that you're a strong number 2 in the market, but you have the likes of Ola, which have almost 50% of the market right now? What would be your strategy to grow capacity in the months to come?
We will definitely set up capacity very soon within this financial year for 50,000 vehicles a month.
And finally, what would be your outlook for TVS Motor Company in FY25? You registered your highest ever revenue and profit in FY24. How do things look as of now, rural versus urban, the market sentiment, and what will be your big priorities in terms of growth of the company this year?
I think, Parikshit, many of the steps taken by the government to ensure economic growth, the fastest growing large economy in the world, keep inflation under control, bodes well for the automotive business and two-wheeler demand, which I believe over the next 2 years will come back to its lifetime high, and also for financial services as well, which is where you see us doubling down. TVS Motors will continue to look to grow ahead of the industry and has some exciting launches lined up. I think the African business in Africa, which is quite large, is also bottoming out and things will improve from here on. As far as India is concerned, urban demand is good. Rural demand also is picking up with the monsoon. So we are really optimistic, Parikshit.
Welcome back, and joining us on the show now is Peter McGuire of Exim Australia. Peter, hi, welcome. I want to start with the crude oil prices, where we have a couple of things happening here. One is, of course, the Iraq statements talking about production output cuts and whether or not they continue to align with the OPEC for that matter. And the other really is about the overall demand, because we've seen gasoline and distillate stocks rise in US. The Chinese numbers are still on the uneven side. So demand and within OPEC, how are you looking at both of these?
Well, good afternoon, Manisha. I think it's certainly hit the market and we've taken a little bit of a breather. I think also you're looking at, a wind back as far as price. You've got Brent sitting at 82, 83, WTI at 78 and change. There's probably a little bit more softness to the downside. I'm understanding the situation, as you mentioned, as far as Iraq and what the situation will be there. They're saying they're going to have to wait and see where they move as far as OPEC. And what the absolute consumption is seems to be a little bit weaker, but I wouldn't be surprised for that to ramp up a little bit over summer.
How are you also reading various reports, and as of now, clearly source-based, that OPEC from now on will not publish a monthly report? It would be OPEC and allies, the OPEC Plus, that is, who would come out with a monthly report.
Exactly, and that's going to be a little bit more confusing to the market. And we always were sitting on that number to say, well, what was the actual consideration to supply, where was production, what's going on, across that whole template. But now it's a broader report. And I think it's probably just the change in the times. I've just gone on to OPEC. I don't see any meetings coming up as far as, that you can actually go to Vienna any short term. So I've just got to sit here and wait and see how it all rolls over the next couple of weeks.
Peter, what's your own sense on what kind of supplies are we looking at for 2024 now, and what is the demand estimates now? Because until now, it's been the best that we've seen in the first 4 months of this year have been around 101, 102 million barrels per day. There are reports that it could reach up to 103 plus kind of levels also. But what's your sense?
Well, I wouldn't be surprised because quite simply, after COVID, everything seems to be ramping back up as far as consumption, Manisha. Strong numbers coming out as far as demand for China and across Asia and naturally in India. So I think that I won't be surprised, maybe a 102.5 to maybe close to 103 by the end of the year. If you're looking at the long-term horizons where over the next, say, 10 years, it's going to be just dramatic up to about 116, 118 million barrels a day. But yeah, in the short term, probably 103 is very achievable. If it doesn't knock it out in 24, it certainly will in 25.
How are you looking at the prices from here on? Because we seem to be hitting that resistance at 85, 86 for some time now.
Yeah. I think there was a war premium built into it. That was a consideration, Manisha, that's probably been stripped out. If something was to develop, as far as geopolitical, then you naturally ramp it back up and ramp it up quickly. So we're just sitting here, it's consolidating at these prices, but we all know one thing. When you study these markets, they don't stay in a tight range for long. Something will happen. and something will push it higher. And I wouldn't be surprised in the short to medium term over summer to see higher prices than what they are at the moment.
All right. So you're not betting at prices reaching below 80 for Brent. You believe that 90 perhaps could come in yet again?
I think so. Well, look, it might touch 79, Manisha, for Brent. I'm not considering that it's going to be, 75. I think that would be really a washout. I just don't see that happening. And I think from the upside, if you're talking about if it was a geopolitical shock, then yeah, 90 is very achievable very quickly. But overall, I think from a demand side, they still want higher prices, and I won't be surprised to take a 90 out sometime over this summer period.
Okay, all right, Manisha as well as Peter. Thanks very much for joining in and taking us through the commodity space and what you're tracking there. Well, on that note, we need to wrap up on Halftime Report. Business Lunch will take all of the action ahead. Stay tuned.